follow-up analysis from Monday's webinar. Hope everyone's doing okay. There were a couple of ideas that manifested. I was looking for another high in Canada. That happened by 10 pips today. Potentially a third drive to a top formation. I said that euro could rally to 106.50, 106.80. We're in the neighborhood there. Said that the yen could weaken and that it was weaker than the USD CAD, and it's bearing that out today. But let me just give you the caveat that the follow-up analysis and any analysis going into the Fed is something that we can just throw out the window, how the market's going to react to whether or not the word patience or patience is removed from the Fed statement, or whether or not Janet is going to look tougher now or continues to be dovish. I think is going to have immediate impact, and there's going to be a lot of air pockets in the market. So again, I've talked about this on NFPs and many other numbers. I'm not going to attempt to predict the direction. I prefer to be flat. Be prepared with important technical levels so that if the volatility takes it into a level that you're looking for, you're able to react to it. I usually like to let at least an hour pass after the number to let all the people that are reacting to the news come into the market. There's an old Wall Street expression that people who buy headlines today sell newspapers tomorrow, so don't be one of them. I guarantee you the markets will be here after the Fed. Make sure your equity is. Give me a Y if you're with me. Because avoiding bad trades is as important, possibly even more important, than being in good trades. Avoiding bad trades does not show up in your account balance because the trade wasn't taken, but I guarantee you it would definitely have a large impact on your trading to recover from bad trades. So if we can eliminate bad trades, that's half the battle, and be selective and be patient and not be afraid of missing trades. Not be afraid of missing trades, because there's always another trade around the corner. If you miss the initial move out of the Fed statement today, that's fine. There'll be, if you miss a rally, you sit back patiently, wait for the next setup and next pullback to buy. If that's still your bias, if you're bearish, you wait for the next rally to sell into, get your fib levels out. And if the trade completely gets away with you, from you, that's fine too, because there's always another bus around the corner. There's always another trade, and it's very important to be selective about what we do and not feel like we have to be in the market all the time, every minute. So just a little bit on psychology before I get to the technical setups of the market. So viewers know I've been looking for a dollar top in the last 5 to 7 days. There's the beginnings of it. Anything could happen with the Fed comes out dovish. Perhaps we start to break down here. The reason I think that there is a possibility for one more spike in the dollar to above 101 is something I went over last week, that 101.30 is 61.8 back from a huge move on the monthly. So we've had one drive here, pull back, two drive here, pull back. So classically, one more shot up above 101 towards 101.30 is going to set up a dollar shorting opportunity for me. Perhaps we'll be able to generate a better entry in the Canadian above today's highs. Perhaps a failing rally in the yen, and perhaps one more good dollar rally that could even abort this action that we've had in the euro so far. Give me a Y if you're with me. So another market tell is I do consider Canada to be a petrocurrency, and as you can see from most of the WTI contracts, let me go see what May looks like. We've made new lows. I believe there is some type of divergence here, but yeah, we made new lows. We're definitely diverging above these levels. This too is going to hinge on a reversal in the dollar. You need a reversal in the dollar to reverse crude. Gold's starting to act better than the crude, but the point I'm making in crude is here's crude at new highs, right? Here's crude at new lows, which normally has been driving USD CAD to new highs. And we only really got a marginal new high here in USD CAD right here. So something I talked about because we had this two drive formation here in Canada that I thought there'd be one more drive, one new high. We made new highs, took out this high by 10 pips. But there's still the potential, if she sounds like a hawk and removes patience out of here, that we could try this three drive line back up here at 28.67. Still a possibility if the dollar index goes to the fib level. Either way, I think we're in a topping pattern. The big question is there one more spike in Canada, one more spike in the dollar, or has the decline begun? I'm going to react to the reaction. But the point being, Canada's really struggling to make new highs as crude continues to make new lows. So that's giving me a little bit of a market tell, saying that Canada weakness, which in our world is US dollar strength against it, paired USD CAD instead of Canadian dollar futures, should have made a new high by a better margin than 10 pips with crude breaking down to new lows. Give me a Y if you're with me. So this tells me that if Canada's having a hard time making new highs with crude at new lows, if the whole world's looking for $40, $35, $30 crude, if we spike down here and the dollar turns, and Canada's really not making a lot of upward progress like it should, just like the yen, with the dollar strengthening, it took a huge dollar rally for the yen to finally take out last year's high in US dollar yen. That if we got a turn in crude, a turn in the dollar, the Canadian will be an even better short because it's having a hard time making upward progress with crude making new lows. Give me a Y if you're with me. So looking at gold, it has a little better look to it. We had a huge range yesterday. Within 1 hour from the 1142 level, there was a $17 rally within a 1 hour candle. Then it gave it back, but we're still above. We have a little bit of an inside day here. Gold looks primed for something. We have an inside day here too. I'm not wildly bullish, but the bear market rally back towards 1190 is possible. I wouldn't be pressing the short side of gold here. Also, if the dollar spikes and gold makes one more new low and then turns up, with the dollar turning down is also a possibility. Give me a Y if you're with me, and this kind of ties in with the Aussie, which on Monday I said buy a pullback in Kiwi, was acting stronger than Aussie. And if you bought that pullback, I was within 20 pips of the buy zone. You have about 50, 60 made. I'd book it, or at least half, and tighten stops to VE on that. And if you were long Canada for that big push up or shorted it at the high, I'd be doing the same thing. Purely money management. And if these are tops in Canada just beginning, there'll be plenty of opportunities because I think we can make a move down towards that 121 level down the road. Give me a Y if you're with me. So that tells me to start, avoiding playing the short side of Aussie if I think we're getting close to a bear market bottom for a rally in gold. And also something that I talked about on Monday that you could have participated in, I said, I believe that Euro Aussie would rally back towards the breakdown, the neckline towards 140. Now that we're trading in the 137 range, we've been to 39.5. Any further strength in Euro Aussie, I'm looking for short entries there as well. I'll give you some more specific areas when I get to the individual instrument. Give me a Y if you're with me on my coverage of the outside markets. There's only one left, and that's the S&Ps, and so far they look negative. We haven't gotten back to the 2090 area that I thought was possible. Perhaps this was a failing rally. You can't rule out if the dollar gets some legs for one more spike up that the S&Ps could try and rally again. I've seen counts that we go down to 2020 before we attempt new highs. So I was right about that there was going to be a bounce. The extent of the bounce so far is underneath what my expectations would be. This too is going to have a lot to do with the dollar and the yen, because if we get risk off in a bigger way, there'll be more of a flight into bonds and out of risk. Give me a Y if you're with me. So called the top on the 3 drive so far. Nice pullback. Said this was it. We should get a B or a 2. Not sure if it's complete or not, but we did get at least this bounce. So I'm not a real super bull. I'm thinking we could even get back and retest highs, but I think we're also in a topping distribution pattern here in the S&Ps, which tells me that the US dollar yen could be a big surprise to the downside. That 120 would just be, 121 would be just a starting point for the decline, and there could be much more to the downside. All the yen crosses, especially the guppy, and we identified the pound as a weak sister. On Monday it continues to make new lows, while the euro has not made a new low, driving up euro GBP. I now think euro GBP is potentially in a sell zone for at least a correction of the recent bounce that we had. So any questions on the outside markets? I correlate US dollar yen with S&Ps, USD CAD with oil, Aussie USD with the gold market. Okay, and with that, let's move on to our individual instruments, our individual pairs, and we always start off with Euro USD. So here we were on Monday. I showed this little breakout of the wedge. I said it targeted 106.80, maybe 107. Here we are. So if you bought the little dip here to look for the target, almost starts to look like a 3-drive formation. If you're long, I would be getting out of the way, and I'm still thinking that there's a possibility. I have confluence of a few lines. Here's a wedge line breakout right here, and the 3-drive to a bottom line where I have confluence up here, down here, right around the 103.90, 104 level. So I don't rule out that possibility of one more spike up in the dollar. If the euro goes up without me from here, that's okay. I'll miss it and reassess. If you want to wait for confirmation, I would say this 105.50 level, 105.70 level, we start taking out these lows, then the probabilities increase for one more low in the euro and one more high in the dollar index. So if Dixie's going to 101, very possible that we could break 240, 260 pips in the euro for the dollar index to have that one more push to new highs. And that would be a fade for me in the dollar, and therefore a fade for me in euro at new lows. Although the conditions that have to be met in that circumstance is that the RSI, just like this divergence, maintains its integrity with this uptrend line, and any breaks back down into this level needs to be accompanied with the RSI staying above 30 to qualify it for a turning point trade. Give me a Y if you're with me on the euro. If you bought it Monday looking for 680, congratulations, maybe pulled out 80 or so, 80 pips. And the reason I said that the euro was stronger than the pound was the pound kept confirming new lows. You know, we had confirmed lows here. We have confirmed lows again in the pound. So the pound continuing to act weaker than the euro. Perhaps that changes, but when we were negative and it was back up here at the wedge, up here at the 55 level, Every rally has failed. You know, we're into some type of zone here. I'm not ready to declare this a bottom yet. I'd like to see maybe one more retest and the RSI stay under 30. It's going to be interesting to see what the pound does if there's one more surge in the dollar index. So, was right about being bearish. The pound back up here. If you rode it all the way down with trailing stops, congratulations. I was covering at 51.80 and really never had another real nice rally except for some intraday stuff to recommit to. So I left 300 pips on the table. I got 300. I left 300. Never claim perfection at the crap table. This 4 hour is starting to look more constructive. I would not be short the pound here. So let the dollar do whatever it wants to do. I think that if there is one more big dollar rally and one more spike, that most likely the euro will lead the decline and EG will begin to correct. So EG has had a nice rally, a very nice rally. I didn't see it coming, but we had a confirmed low on the daily, we have a confirmed low on the 4 hour, and we have a confirmed low on the hourly all the way back here. So that gives me a bearish bias for a possible retest of the lows, and at the minimum some type of correction off of this rally. The low was 70.13. We got up to about 250, so that was 240. So why not be able to pull back towards the 71.10 level? What would really be bullish would be for the euro to make new lows down at 104 and us end up not making new lows in euro pound. That would be a market tell and something to pay attention to. So I'm leaning towards the short side in this euro pound after the number, thinking that at least we're going to pull back off this correction. Let's get some fibs in here. And that's saying that the euro will be the preferred short and pound would be the preferred long on weakness. Give me a Y if you understand that. Get rid of all these fibs. So at the minimum, looking for fib retracement of this 240 pip rally from this low, this confirmed low, to perhaps right around today's highs. Yeah, 61.8 comes in at this 71 level. So if euro makes new lows, I think we'll get at least 61.8, maybe 78.6. But the key thing would be if euro trades down towards this 104 level in the days ahead of us, that if euro pound puts in a higher low, even if it's 78% back, retracing this and not a new low, that would also be another sign of a dollar turn. Give me a Y if you're with me. Using the EG as an indicator for preferred shorts, preferred longs. So if I think EG is going to correct and start heading down, at least to correct this bounce, my preferred short is the euro. Just like on the way up, my preferred long was the euro. So if I think it's heading down, my preferred short is the euro. And with it heading up, your preferred long is the euro and your preferred short is the pound. And was that correct? Yes. The euro held and the pound kept making new successive lows. So perhaps that's going to shift here. If I'm looking for some type of correction in EG, that favors the pound more on the upside and favors the euro more on the downside. Give me a Y if you're with me. And feel free to stop me at any time, because you know, it's my mission not for you just to get trading ideas, but to understand the hows and the whys behind it, so that you're able to repeat these things. So far coverage on the outside asset classes, and we've covered euro, we've covered pound, and we've covered euro pound. So here we go to the end. So I talked about that we could be rolling over here and had this line drawn Monday at the webinar that we could be heading towards the 120 level. We're only about another 80 pips away. But when you look at things like the monthly up here, very possible we're at a more significant turning point. The weekly, glaring divergence here on the yen. Everyone thinks 125 is a lock. Well, it may be a lock, but, you know, we could see 118 first. So, you know, people that are locked into the upside target, 118 is a possible target, let alone if we start thinking about an ABC from here, then you're talking about 110. That would mean a major stock market correction in the works, peaking out here, and it's going to be more than a dip to 1900. So negative on the yen for a while, at least to the 118 level. Not sure we're going to get one more pop here. It looks like it's rolling over. But if we do, I'd be looking at rallies up around this 121.62 level, an 80-100 pip rally, especially if the dollar index has that one more push to new highs. We should get some type of recovery in the yen, although it may start from lower levels. As I talked about on Monday, if you took the trade, I was talking about it rolling over, much weaker than Canada. You took no gas in this, where you didn't make any money being short Canada, because up until the last 4 bars, we were making new highs. So I pointed out the relative strength that we really weren't diverging in Canada much here, but in the end, we had very classic divergence up here at the high, near the high of the move on the 1 hour. Not so much on the 4. But the 1 hour, we had very nice divergence. So I think that the bear case is building in US dollar yen, favoring selling rallies there. The yen crosses, we've had a recovery in euro yen. I'm not real impressed. It kind of looks like the euro to me. And there's still a possibility. Here's drive 1, here's drive 2, that completion of this could take it to new lows down around 125.85. But since we've been negative cable for the last month, I said preferred yen cross short was the guppy, and guppy's been under a lot of pressure, pretty consistent pressure. Perhaps we're going to have some type of reaction here, back towards 180. I think is a possibility. We're beginning to diverge here, so again, this may be more about the pound beginning to gain some relative strength on the euro. But again, you had great profits. We talked about this from the 185 level. So you had a few nice rallies because I've been negative the yen for a while, even though it hasn't made much downside progress since we took out the highs. The pound has really been the star on the downside. It's had a lot of pressure, and that's something I talked about as well, that the market was much more bullish the pound than the euro. And late stage on this dollar rally, the pound definitely took over to the downside, and it had a special weakness against the commodity currencies, and so there could be something setting up there in pound Aussie, pound Kiwi as well. But this was really the best trade of the yen crosses. And I'd be booking it here. As you can see, we might be setting up some type of descending triangle, and we start taking out 176, 177. We could set our sights on 167. So it's doing nothing right, not enough for me to want to get long. And again, it's a stand aside. Why not take what's come to you in the last couple of weeks? It's been pretty directional from 85 down to here. Get flat. Okay, now I wanted to talk about Euro Aussie because on Monday I talked about the potential down here with it diverging of us being able to rally back to the neckline, back towards 140, and we didn't quite get there. High so far has been 39.68. If there is a little pop back up towards 140, so 142, I'd be scaling in. I'd be surprised to see closes back over 140.70. So any strength that we have here in Euro Aussie, I want to be a seller in. So to me, it looks like we're setting up a little bit of a 3 drive. Here's 1, here's 2. I'd like to see one more push up towards the 140 level or so to start probing the short side again of Euro Aussie, because if this is a major breakdown and we're holding like a 200 week moving average, but we can't close back above 40.74, that's a massive downside target. It's close to an 1800 pip move from 140, gives you 122. Here you are, 122. So we participated in some of this and a lot of this, and I view strength as another opportunity to start building Euro Aussie short positions. Give me a Y if you're with me on that. So perhaps Euro Aussie pops after a Fed statement. To me, that would be an opportunity. Anyone with me on it? So let's get to the commodity currencies. My preferred long from Monday was the Kiwi. I said I think we could get an ABC pullback. I think I talked about this line was 72.45. The low was actually 72.70. So if you bought this little ABC, I'd be booking it. If there's one more charge in the dollar, perhaps we still try 72.40, but the Kiwi hasn't made a new low in quite some time. We're getting a succession of higher lows. Here's our first higher low, and now we have potentially a second higher low setting up. So I think that there's potential, especially after the dollar peaks. Should we have one more big move in the dollar towards that 101 level, this would be one of my preferred longs, not making new lows, risking the low of the move in the Kiwi. And I still prefer that over the Aussie. Aussie was not that far away from making new lows. In fact, we did make a new low while Kiwi didn't. It was a nice divergence here. But we're still way off this high, as when you look at the Kiwi, we're almost there. So Kiwi still displaying more relative strength. And I was talking about Aussie Kiwi going to new lows. I believe that's something else that may be manifesting here. Perhaps we get a right shoulder. Maybe it holds this 101.35 level. Starting to look like it may put in a higher low. I can't rule out one more washout for a 1, 2, 3 drive to a bottom. I know that if they took it down into this zone, I'd be interested. So this could be drive 1. This could be drive 2. It's not a good line. Let's try it again. This low, and this low. So down in new lows around 102.50. It's about 120 pips from here. The daily already is diverging. You know, we're still quite a few pips away. Here's the low here at 102.75. So we're 100 pips away. So I'd like to see it try this area in here. A lot of confluence at 102.5. Write that number down in case you see that in the Aussie Kiwi. Again, we're going to be looking for conditions that are conducive for that type of trade. Give me a Y if you're with me. Hello, Molson. Any questions on anything I've covered here? So from Monday, there were a couple of decent calls. I said that Euro Aussie would rally back to the breakdown area, the Euro Aussie, and that's what happened. We were here Monday. then we rallied back to the breakdown. So I'm looking for one more push up in Euro Aussie to give it a shot up here, maybe around the 140 level, 39.90, all the way up to 40.70. Closes over 141. The scenario is being negated. Canada, I talked about one more new high. We got it. Is Canada, can it regroup for one more push up? If it does, you did okay trading this. We did diverge up here. Still can't rule out 28.60. But this does qualify as a very glaring divergence from the highs that I pointed out on Monday. So if you got long, you got your new high and it did not confirm, that was your warning to get out of it. And the yen acting weak. Would love to see one more pop in the yen, one more rally in the dollar to get some of these positions on. But I'm prepared to act if the outcome's the other way. Any questions on anything I've covered today or anything I haven't covered? A pair that you would like me to take a look at and provide a view for you? Especially for those who showed up a little bit late. Anything you'd like me to go over again? I'd be happy to. Going once. Going twice. Okay, well, good hunting on this Fed day. The key word is whether or not patience remains in the statement. A lot of people feeling that she will be dovish. That'll put off rate hikes until, who knows, 2025, I think. But if she removes that word patience, she's going to sound hawkish. We get that one more surge in the dollar index up to the fib 101.37. Take advantage of dollar strength to sell into it. Preferred longs are Kiwi, making 2 successive higher lows. Shorting opportunities in Canada as well, as it's struggling to make new highs with crude making new lows. And Euro Pound looks like it's primed for at least a correction of the recent 240 pip rally we've seen. So, plenty of ideas. Remember, don't try and predict the reaction of the Fed. Just have your levels ready. Let the dust clear for an hour. And if your levels are met, that's your opportunity. The other is betting black or red on a ball spinning around a roulette wheel. Capiche? Okay, everyone, thank you for your attention. Good hunting after the Fed, and I'll be back with you next week. Thanks for your attention. Thank you, RoboForex, for giving me the opportunity to share my views and my work with your clients. Good luck, everyone.